Hey, welcome back. You know, a couple of weeks ago, we had a great guest who called himself a life coach. We had a great show. And a couple of people said to me, wish we had a financial coach. And I said, financial coach, great idea. In this day and age, with the economy the way it is, we need financial coaches. And guess what? We have one for you today. My name is Vin DeQuino. His name is Carnell Newsome. Carnell,
Vinny,
good to have you aboard.
thank you. Thank you for having me.
Talk to me. What in the world is a finance coach?
Well, a credit coach is someone that educates people on how to have excellent credit. You see, when it comes to credit, Vinny, if you think about it, it's not taught anywhere. It's not taught in elementary school. It's not taught in junior high school. It's not taught in college. It's not taught anywhere. So when it comes to credit, people don't have a clue on what to do to get their score up.
So you're actually called a credit coach.
That's correct.
So a credit coach educates people on how not to get into trouble. And a lot of people do. This whole idea of credit that's available everywhere, I can't go to my mailbox without having some kind of advertisement from some bank or institution who wants to give me money. What they don't mention is they're giving me money at about 21%. They're not giving me anything except a headache. So what happens? I am sure that as a credit coach, you have advice for these people.
Absolutely.
What don't we want to ever do, Carnell?
Well, the first thing you want to do is that you don't want to just take any offer. You want to do your research. And the first thing I would tell people is to see what's on your credit profile first and what you can do to increase your credit score.
So let's pause for a minute. Credit profile. This always blows my mind that somewhere out there, all my business is on their business. And they know exactly what I spend. They know who I owe money to. And they decide whether I'm good enough to lend any more money to. And this important information really is important because it could stop me from buying a house or a car or a new sofa. And somewhere out there, someone has this very controlling information. Talk to me a little bit about these people who have my interest at their heart.
Yeah. So when it comes to a financial institution, they decide what your interest rate is going to be based on your credit score. So, of course, the lower your score is, the higher you're going to pay in the interest rate. That's why if you ever noticed that when you apply for credit, all of a sudden that you get all these pre-qualification letters in the mail from all these credit card companies or these other banks or car dealerships.
Because they know that you went there to find out about credit.
That's correct, because the credit agencies, TransUnion, Equifax, and Experian, they're in the business of making money.
So there's really a business behind the business. This always drives me crazy about our system. And the whole idea that banks and companies can make a fortune on us. And they actually do. I mean, years ago, loan sharks who would charge somebody 25% for a loan, we would say they're loan sharks. Today, stores and businesses do it all the time,
including credit card companies.
And you pay this minimum payment, which means you're going to owe them forever until this thing is paid. And the interest is thousands of dollars. It could be. So that what you're buying, you end up paying 25 to 50% more for the item.
If not more.
If not more. So you can get ripped off big time. Plus, they can decide whether they'll loan you money or not. And when you are loanable, they send you all kinds of things to get you unloanable. By the time you're done, you're up to finance up to here because you figure, hey, I can do this. You get this thing in the mail that says, you've been approved. And you go, okay, you know what? I'm going to buy a bigger, better car. Right. I'm going to buy a bigger, better house, bigger, better washing machine. And before you know it, you can't afford it. Talk to me a little bit about that.
Yeah, so speaking of what I was saying earlier is that the credit agencies, what they do is they sell your information to other banks. So when you do a credit inquiry, TransUnion, Equifax, and Experian, who are privately owned companies, and people actually give them a nickname by calling them credit bureaus, what they do is they sell your information to other banks, and they'll say, give
So
any
they're making double money on you.
pretty much. And what they do is this, is that they'll say that, so, give Vinny a pre-qualification letter because he just applied for financing. And then they pray that you get the financing because the lower your score, the higher you pay in the interest rate. So it's a billion dollar business.
So it really, I mean, and I hate to put it this way, but in a lot of ways it's a scam because what it does, it traps you into becoming more and more in debt. And before you know it, and what's amazing is you get punished for doing certain things. For example, if you go to a bank to apply for a loan, your credit goes down because you made an inquiry, and it lowers the bank rate. And just as you say, they want you to have a lower credit rating because that gives them the ability to give you a higher rate.
Correct.
So they don't want you to have great credit because they make less money on people with great credit.
That's correct. And with great credit, you have more choices. If you have great credit, for an example, if you have an excellent credit score, like a 750 and above, you can go to any car dealership. You can say, I want that car, I want this interest rate, and I want this payment. Well, with bad credit, you can't do that. When you're going to the car dealership and you want to get a loan, now they're going to tell you what type of car you're going to get, what type of interest rate, and what your payment's going to be.
Let's tell them about what happens when they send out a notice that says, you have bad credit? No problem. What does no problem mean, Carnell?
No problem means that they're going to charge you high interest rate and high fees. That's what that means. There's nothing for free.
They love when you have bad credit because instead of 3%, you're going to pay 30% or 23%. And many of these big box stores charge ridiculous interest.
And then the sad thing about it, because you're paying these high interest rates, is that at the end of the term of the loan, you're upside down with the trade. So now when you come back to buy something else, you end up owing more money in the car than for what you originally purchased for because most of the money is going to the interest rate.
Yep. And people don't realize how much interest is involved. And when you say, they say to you, oh, don't worry about it. We'll give you 30 years to pay your house. Yeah, and for those 30 years, you're paying interest. So, and when you actually sit down and look at it and break it down, you're paying $7,000 a year interest. That's not for the cost of the house, nothing more than paying those people to make your payments for you.
That's correct.
So your house isn't $190,000.
It's actually double.
You double that, and maybe more, depending on the interest rates. Same thing, and then they say, oh, don't worry. We'll give you a variable rate, which is low right now. Right now is the key word, because that rate can go up, and they have a level. I mean, it can go up to 8, 9, 10%. It's a lot more than you expected. Now, I have friends who are in major trouble because they went to banks and said, can I afford this? And the bank says, yeah, you can afford this payment, not a problem. What they don't tell them is by the time they get done, that payment's going to be a lot higher.
A lot higher.
And some of them do what they call a balloon payment, where at the end, they have to pay like $20,000 to keep the loan that they have, which they don't have. That's why they're in trouble in the first place.
Right.
Or they lose their job, or they have to change jobs. I have at least 3 friends who've lost their homes.
Probably more, if you think about it.
3 that I know. Personally, people I know of are a dozen who bought houses. They bought them at the high cost, like 5 years ago, 10 years ago. could buy a house for $320,000. Then when you go to sell it, the most you could get is like $220,000. They sell the house and they still owe $100,000. And they're living in an apartment. I have friends that are in that situation.
And the banks don't want to help them.
And the banks don't help them because, oops. Banks don't lose because they'll turn around and sell that house. So it really does, it just drives me nuts. Another thing that drives me nuts, you go and you go to a big box store and you buy a TV and you're paying 20% interest. Now, you have $5,000 that you inherited from somebody, $50,000. You take that $50,000 and you put it in the same bank you went to borrow money from. They give you 1%,
right?
Maybe even less than 1%. Yet when you borrow money from them, it costs you 20%.
And it's sad.
Something wrong there. And when people don't realize that, they get deeper and deeper in debt.
That's correct.
And they're in trouble. So that's when you bring them in, Carnell, yes? And you talk to them about you made a mistake and you're in trouble. Can they get out of trouble? How do you get out of trouble? Once you're up to your nose in debt, you've already made a mistake. Is it too late?
Never too late.
Okay. So what do you do and what do you tell them, Carnell?
Yeah, the first thing I tell people is get a free copy of your credit profile. Go to annual
And yet once a year, they're entitled to it, right?
That's correct.
Free.
Free.
And that's another thing that blows my mind. It's your credit report. You have to pay to see it.
Well, if you go to annualcreditreport.com, it's the only company that you can go to and you can get a free, accurate copy of your credit profile.
Yeah, well, but that drives me nuts. They're keeping your information in their files, and you have to pay to see it. Except for one company.
Right.
And that company has to show it to you, right?
Has to show it to
So
you.
you're entitled once a year to see it. Now, they need to know that if they do see it, you're paying for it. It costs you money to find out if your report is positive or negative for you. And it very well could be that in that report there's something that isn't true. So you can, once you look at that report, you say, wait a minute, I don't know these people. This is wrong. So you have the opportunity to see that. And even though usually it costs money, you don't have to pay for it at least once a year. So how do they do that? Where do they go to get this free credit report?
Yeah, so you would go to annualcreditreport.com.
Annualcreditreport.com.
That's correct. And you can get a free copy of your credit profile from all 3 credit reporting agencies. But whatever you do not pay for the score because they don't give you the score, they just give you the credit profile. And the reason why they don't want to get the score, even though it's coming from TransUnion, Equifax, and Experian, is because the scoring module that they use is different from what the banks use.
Say that again. That's very important.
Yeah, so there's a couple of scoring modules that's out there. There's the FICO scoring systems. That's mainly what the banks use to give you financing. And then there's your Vantage scoring system, which kind of mirrors the FICO scoring system, but it's different. They use a different algorithm to calculate your credit score. So when you go to these companies online to get a copy of your credit profile, be careful when you're getting a score from. So if you're going to...
Because that score is not necessarily the same score that the bank is going to see.
That's correct.
Or the people that you're trying to get credit from.
That's correct. It actually could be higher. It is misleading, and I know a lot of folks who go online to places like some of these companies, I don't want to say their name, and they get their credit profile, and then they'll think that their scores are 700s, and then they'll go to the bank to get financing, and their score will be a 600. So if you want to see your real FICO score, you can go to a bank, you can have them pull your credit, or you can go to a company called myfico.com.
Myfico.com.
That's correct, and you can get all 3 of your credit scores there, but you're going to pay for it. Or you can go to a company called...
When you say pay for it, what's pay for it?
That means that you're paying to actually see your real FICO score.
And what kind of money is that?
Yeah, so if you go to myfico.com, it can cost you anywhere from $25 up to $50 depending on,
So they're going to charge you to see your own information.
which is sad.
Boy. Also, doesn't that affect your score? When you make an inquiry
glad
into
you-
your credit score, it lowers your score.
I'm glad you asked that question because there's a couple type of inquiries. There's a hard inquiry, that's when you go to a bank or car dealership and they pull your credit. That can affect your credit standing. And then there's a soft inquiry, that's when you go online and pull your own credit. That doesn't affect your credit score. So you can
Oh.
pull as much as you want as long as it's consumer driven and it's online. It doesn't affect your score.
Oh, so, but you may have to pay for it.
Well, if you want, that's correct. If you want to see your real score through
Right.
myfico.com or some of these other places,
You have to pay to do
you're
it.
gonna have to pay to do it because they're third-party providers, so they charge a fee.
All right. So talk to me a little bit about scores, because people, excuse me, people hear other people say, I have an 800, I have a 700, I have a 600. What does that mean, Carnell?
Yeah. So of course you know that the lower your score, the more money you pay in the interest rate. But FICO has a score module where it starts at 300 being the lowest to 850 being the highest. There's other scoring modules that's out there where they start at 501 being the lowest to 990 being the highest. So that's why you gotta be careful on where you're pulling your credit score from, because if you go to some of these online companies, they might be using a different score module than what the banks is using, and before you know it, you're paying a higher interest rate. Now the good thing is, a lot of the credit card companies today are giving you your FICO score. So they're giving you a FICO score.
And
you
that's
don't
the real score.
well, it depends on which version of FICO that the banks are using to give you financing, because there's different modules of FICO as well too, but it is your real FICO score.
So you get your real FICO score, and that tells you about where you are. So you want to be at 800.
As close as you can.
But if you're like at 700, you're going to be paying more interest.
That's correct.
If you're at 600, you may not even get credit. They may deny you because your credit isn't high enough. And in the meantime, because you went to them, you just lowered your credit even more.
That's correct.
And it's a trap.
It's
It's a trap. It really is. And it keeps you as a debtor locked in. However, how in the world are you going to buy a $300,000 house without credit? It's just not going to happen.
No, not at all.
So you depend on them, and it's prison. It's a debtor's prison. And some people just can't get out of it because they end up owing more than they make. Or in the case of my friend, they have a house, they owe more than the house is worth. I've had friends who said, I can't do this. They pack their bags and they walk out the front door and they say, go ahead, take the house. I don't have any choice. and then the bank has to go out and try to sell it for what they owe. Not what the house is worth, what is owed to them. So the bank, many times, recoups their money. And you're out of house. And all the money you put into it, all the payments you've made up to that point are gone. And you're, excuse the expression, screwed.
Screwed. Yeah,
Yeah.
absolutely.
So how do you keep your credit in good standing?
Good question. So the best thing you can do is that there's 5 major factors or components that drives your credit score every time.
Okay, take out your pencils.
Absolutely.
Take out your paper.
Yes.
Because what
wanna-
Carnell is going to tell you are the 5 major things that lower a score. So before you do these things, think about them. 1,
Number 1, 35% of your score is made up of your payment history. So make sure that you pay all your bills on time.
don't pay late. You know what some people fall into the trap of? They say, oh, wait a minute. You know that date on the thing? You have 15 days besides that. A lot of people don't know that if it says the due date is February 3rd, you have 15 days from there before it affects your credit. people go, I got 15 days. So what happens? They wait to the end. The 16th day, you're done. And that goes on your credit report as delinquent.
Well, no, let me just
No?
correct that.
Oh, good.
So it's anything past 30 days.
Oh,
so
30
what happens
days.
is that if you don't pay within 15 days, the bank can charge you a late fee.
Oh, late fee. Okay.
Yeah, so it's anything past 30 days can
Then
cause
it
a late
affects
payment.
your credit.
That's correct.
So you don't want to be a month late.
That's correct. You don't want to be a month late. And if you are past 15 days and you do pay the payment, make sure you include the late fee as well too, because if you don't include a late fee and you pay the payment, they'll still mark it late as well too.
Ah, okay. You need to say that again.
Yeah, so you got a 15-day window to pay this credit card or pay this loan. So make sure that if it's past 15 days and there's a late fee,
Pay the late fee, because
And-
that late fee will count as delinquent.
that's correct. It could be overage, and if you don't pay within that 30 days, they can give you
Okay.
a late
So,
payment.
number one, pay your payments on time. This camera's driving me nuts here. I don't know which camera to turn to. So, there you go. Pay your payments on time. Rule 1. Rule 2, Carnell.
Yeah, rule number 2 is that 30% of your score, which equals 65% of your credit rating, is made up of your amount owed. And what they mean by that is it's your total debt you have or your balance to limit ratio on your revolving charge card. So for an example, if you have a credit card with a limit of $1,000, you don't want to carry a balance on it no more than 30%, no more than $300 on that card.
So, if you go to your limits, that's going to hurt your score.
That's correct. So you don't want to carry a balance on it no more than $300 by the time it gets reported, because if you do, you're going to give up some of your credit points.
Okay, so that hurts. So, number 1, pay on time. Number 2, don't max out your credit amount. If they give you $1,000, don't run it up to $1,000 and then go to your next card and run that up to $1,000, because it'll kill your credit. Number 3.
Number 3 is made up of your length of credit history. How well do you have a relationship with your creditor? So for an example, most folks who have longevity history with their credit cards, then they get new pre-approval letters in the mail for other credit cards, or if they run into a lump sum of cash, they'll take that money, they'll pay off the credit cards, and they'll go as far as cutting them up and closing them out. And as soon as you close them out, you're giving up 15% of your credit score. So you never want to close out any old credit cards unless you have
Carnell, that
Tier
makes
1
me
credit.
nuts. Because you know what that tells me? Again, I'm sorry, but in my head, that's a scam. That's saying, here's a hook. You're going to keep owing us money. We're going to keep that account open because we're going to tempt you to use it again and again and again. And if you don't, we're going to punish you.
That's correct.
And that's really what's happening. They force you to keep it open so that when you need money, you'll go back to use it again. And you get punished if you don't do that.
That's correct.
That's, to me, in my head, so wrong.
And Vinny, and if you don't use the credit card, let's say you have a zero balance on it, you decide that you don't want to use the credit
Right.
card. If you don't use it every 6 months, even for gas or for whatever, the credit grantor may close you out.
And then once they close you out, your credit's affected.
Your credit's affected.
That's amazing. Forcing you to borrow money. Forcing you to borrow money. Or lower your score and then, screwing you again by raising the interest rates because your score is lower.
So my solution to that is buy things that you can afford, like gas or small groceries, and then pay it off. So this way you don't have to worry about going into debt.
So you are being forced to use your credit cards.
You're being forced to use them.
And Carnell, how many credit cards should you really be holding?
Well, the banks like to see that you have at least 3 positive trade lines. And a positive trade line, which is good, is
Can that be a mortgage?
it could be a mortgage, it could be a car loan, and it can also be a credit card. You know, they like to see 3 types of positive trade lines.
But they don't want to see 10 credit cards.
They don't like to see 10 credit cards.
They like to see 10 credit cards.
the credit card companies,
but it doesn't do you well.
Doesn't help you out. That's correct.
No.
But the best trade lines you can have is a mortgage loan, because that's a huge obligation.
Yeah.
And if you're paying on time, it shows that you're responsible. Also, a car loan, which is considered a collateral loan, secured loan, that can help you out as well too. And then a a credit card as well too.
But they're going to try to encourage you. If you have a mortgage, if you have a car loan, and you have one credit card, your mailbox is going to be full because they're going to be trying everything they can to get you to borrow more and more and more. Because the more you borrow, the more they make. And you have to understand that you're spending more. Now, we did 3. We got to go to 4.
Okay, so number 4, what makes up your credit score? The fourth type is a mixture of unsecured credit and secured credit. And unsecured credit being things like credit card that has no type of collateral backing. And then secured credit would be anything that has equity built in it, like a mortgage loan or a land loan.
Yeah, you're paying it, and as you're paying it, the amount owed on the house is going down, and the value is still up, so you have equity.
That's correct. And then the last 10% of your score is made up of credit inquiries or new credit applied for.
So every time you go to a place and find out if you're able to borrow money from them, it costs you.
It does. So for example, and I want to clear this up, is that there's a big myth that goes out there, is that when you go to a car dealership, that the car dealership is going to rate shop, or you might go to a couple of banks to try to get the best interest rate. So as long as you do your rate shopping within a 15-day window, you can have multiple credit inquiries, and those credit inquiries only hurt you one time.
Okay.
Anything outside of 15 days looks like you're desperate for credit, and then those credit inquiries can hurt you anywhere from 2 points to 5 points.
How bad do they hurt you?
They can hurt you anywhere from 2 points to 5 points based on my experience per credit
And if
pull.
you're like at a 600, that hurts because it'll take you, because every time you go down, your interest goes up.
Correct.
Carnell, very enlightening. You are a credit coach. So people who have trouble with credit, people who need to know more about what you just taught us, can come to you.
Yes.
We have a number on screen for Carnell so that we know how to get to him. There it is, 888-686-2409. You'll be willing to talk to those people and say, no, don't do that.
No, don't do that.
Or you do it this way instead. It's been wonderful. Appreciate everything. Any last minute words you want to say?
Yes. You know, I would recommend everyone to get a free copy of their credit profile and go to annualcreditreport.com
And make sure it's right.
and make sure you get a free copy of your credit profile and you're entitled to it once a year.
Sounds good. I cannot thank you enough for being here. Thank you for what you do.
Thank you for having me.
There's so many people whose lives are destroyed because of the economy. Thank you.
Thank
you
you
for being a coach. Thank you for being here. Thank you for being here. It has been a pleasure. Stay tuned. Watch us every week. Go to YouTube. Know we're here. Thank you for being here.